Everybody, this is John, and welcome to the free video. So what is going on with the stock market? How far can this go? Are we just going to keep exploding higher here? This is kind of the mother of all short covering rallies. There was a nice move here in terms of, this was not a short covering rally, this was a squeeze. Okay, and that squeeze pushed the spiders up about that far, and what I want to do now is just take this and then show where we are right now, and you can see essentially we've gone about the same length as this move here. The difference being that this was a long setup. This sucked in all the shorts, and you know what I do is when we get closes below the 21 period moving average, I focus on the short side, and then I have stops. You know, once we cross back up to 21, then it's just you just reverse and go with it. So what was nice here is that there was a lot of first and second targets hit on the downside, and then any of the remaining stuff got stopped, and then it just boom. And it wasn't in all stocks. I mean, there are stocks that actually didn't show any sign of selling off, and so that's really where, you know, focusing the most long attention on those stocks. So the question now is, we've had this great run, and is it over? Is it as extended? And what are the best stocks here? Well, so the two things I'm looking at are one of the Qs. I mean, the Qs obviously are having a great run here and continue to move higher, but also looking at the yen, and through FXY, which is the ETF for the yen, you can see now that on a weekly chart, it's starting to roll over and potentially trigger a short squeeze. What this means is that, and you can see what happened here during the last squeeze, and that was a huge run up in stocks during that time. And what this means is that if the yen does trigger to the downside, then these markets, these stock markets that actually look extended, actually would have a lot more to go. So just kind of remember that, you know, it's easy to think in terms of, oh my gosh, this thing's extended, it can't go any higher. But, you know, literally the trend's your friend until it ends. Now, is this the place that we want to be adding new positions? Now, what you want to look for, I mean, this is actually one of my favorite trades right now. And what you want to look for are situations like this where, I mean, man, you got this daily squeeze, you got a weekly squeeze, you got a nice trend, you got a nice trend. This is one where we were last week buying calls and selling puts, and then today you get paid. And that's how it works. And this is not something where you want to actually chase it right here, right? So what we want to do is go through and find strong stocks that are pulling back. Okay, and there are a couple like that. VIPS, that's one that you can see that has had a huge run here, but definitely pulling back. And so I would be fine in this zone here, especially selling one standard deviation put spreads. Now there's not a squeeze, but again, we don't want to presume here that the trend is ending. Okay, and then in terms of other markets and things like that are here, I've been a big fan of kind of keeping an eye here on SDS. You can see that there's a lot of volume here, and one of the questions that people will have is, well, what happens? You know, this is a leveraged ETF, by the way, that if the markets go higher, or if the markets go lower, then this goes higher. And this is actually one of my favorite ways to play pullbacks in the market. So what I'm looking at here too is that you can see we've got kind of a double bottom here, and the potential for this to actually kind of at least pop and retrace about half of that. And so I've been looking at that, not only just to do it, just doing it through the actual ETF. So other ETFs that I'm looking at here, especially in the triple leverage, is Dust. And you can see here it actually had a squeeze, which was pushing it lower. And of course, this has been having a tough time. And what this is, for those of you that don't know, this is the gold miners, the mining stocks bear, and it's triple. Okay, so what you look for here then is that it's essentially going to do the opposite of GDX. So GDX is the gold mining stock, it's regular, and anytime this pulls back, Dust will just explode higher. And when I was watching here, is this daily actually kind of ran out of momentum, and this could easily pull back here to like 25.62 or so. So what's a way to play that? Well, this one's kind of fun because it's triple leverage, and it can actually pop up fairly quickly. So I do like that as kind of a shorter term play, looking to make about $1 or so on it. And another fun one here is UPRO in terms of it's a triple leveraged ETF. So the overall markets today, the S&Ps were up about 0.50%. You can see here it was up 1.43%. And again, just another way just to kind of milk some of these moves out and utilize these double and leverage ETFs. For those of you that are interested, I don't know how many of you if you traded a lot of ETFs or just regular ETFs. Obviously, I like doing options on ETFs as well, but if you haven't traded the actual ETFs, especially the double and triple leverage ones, it's a real great way to be able to get into a position without worrying about theta decay and things like that as well. And what I'm going to talk about, we're going to do a class on Saturday, and it's going to be how to swing trade ETFs for income and growth without having to be in front of your computer all day. And the idea of this class is actually focusing on the ETF itself. Okay. Now, for those of you that understand the setups, you could of course do options on the ETF. But what I'm going to be focusing on is assuming it'll be mostly on the actual trading of the ETF. Which ETFs do you want to trade? What are the setups that are good to use and everything like that. But it's also really understanding the leveraged ETFs. So when to use leveraged ETFs and when to use standard ETFs to maximize profits and minimize risk. And why would you want to just do an ETF? Well, part of it is that you can actually participate in a position without an expiration date. And that's a nice thing instead of if you get an option that expires in 12 days, and you're limited to that window for that trade to work out. But there's a lot of these ETFs that are actually fairly low priced and have double and triple leverage that you can actually just do the ETF itself and give yourself a little bit of an edge that way. The best ETFs to trade for consistency and stability, because trading the wrong ETFs can also hurt you a little bit there. And I always like to throw in as much stuff as possible just to make these just really good classes. And these are trades that I do. What's nice about these is that you don't have to sit in the front of the computer at all. You can just place these orders. The nice thing about ETFs is that the ones that I use anyway, the bid-ask spread is really tight. So you can actually do a lot of stops, trailing stops, buy breakouts, etc. With options, a lot of times you're going to have that wide bid-ask spread and sometimes not a lot of volume. It's not the case for the underlying ETF. So this class will be a Saturday class. It'll be 4 hours. It'll be from 2 to 6 p.m. East Coast time this upcoming Saturday. And if you can't attend, that's fine. It'll be recorded. This is what goes to the site. It'll be $4.97. If you're seeing this, you can get it for $2.97 and get you up to speed on everything you wanted to know about trading ETFs and leveraged ETFs for income and also building up your account. Hope it helps and looking forward to seeing you on Saturday.